All right, today I'm sitting here in the Bondora head office with Pärtel, the co-founder and CEO of Bondora. Thank you for hosting me here.
Thank you for coming.
At the first point, I want to introduce yourself and the platform to the people, because some of my followers maybe don't know Bondora and what are you doing, so feel free to talk a little bit about that.
Sure, so my name is Pärtel Tomberg. I'm the CEO and co-founder of Bondora. The company was founded already late 2007.
Mm-hmm.
We registered it in 2008 and then rolled out the product to the audience first time in February 2009. So we've been live for close to 17 years, and we've been operating, close to 19 years now. We started out as a classic sort of peer-to-peer lending or eBay for money, in that sense, where borrowers came, applied for loans, there were public auctions, and then in those auctions retail investors could invest in parts of the loan. And the starting premise at that moment of time was about kind of giving consumer investors or retail investors like a simple product they could understand. They could manage themselves and would have predictable returns. And then on the sort of consumer side, we wanted to give them like easy online access to fair credit. And that foundation broadly has remained same for close to now 17 years, but we have pivoted the business model and operating model quite a few times. Yeah. Today we offer credit in 5 countries. So Finland, Estonia, Netherlands, Latvia and Denmark is where we originate loans in. And on the same time then Go and Grow provides access to a portfolio of hundreds of thousands of loan fractions to investors all across Europe. So we're open to everyone in European Union and the community area.
Okay, so from the legal structure, you have the Bondora OÜ in Estonia. This is like the platform to invest to Go and Grow, right? And behind it is the Bondora AS. This is like the loan originator giving loans away, or how is this exactly working?
So broadly within the Bondora group, we have, 2 quite distinct, businesses and customers. So on one side we have the credit origination and servicing, where we have currently the licenses under Bondora AS, where we issue loans, and we are the lender, the servicer of those portfolios. Parts of those loans or fractions of those loans are then transferred to Bondora Capital, and through that to Go and Grow investors. And Bondora Capital is the sort of entity that manages Go and Grow and all the retail investors sort of like products.
So right now Bondora AS is just a regulated loan originator.
Consumer lender, yeah.
Yeah, exactly.
Credit provider.
Everybody knows about that. You're registering for Bank Lizenz or applying for Bank Lizenz. So why are you doing this, and what are the benefits for you and also for the investors?
So we've had banking license and acquisition of a banking license as a strategic pillar in our plans for a number of years, because the transformation to become a pan-European neobank focused on consumers and their purchasing needs takes some time, and it's not an overnight journey. So you have a formalistic approach or formalistic part, which is you have the paperwork, you file it. But in order to have the paperwork and file it, you actually need to build that operation up front. So maybe 10 years ago, you were able to still get the bank license that you created a stack of documents, file it, and then later on, you built everything. Now, you're basically pretty much pre-vetted that everything you want to do, you already have in place before you start. Yeah. And that process takes through 2 journeys, let's say. So you have counterparty, which is your local regulator, but officially the license decision is also approved or given by the European Central Bank, right? Regardless of the size of the bank you're going to be in. So everything after goes through your local entity, your local sort of regulator, and then the European Central Bank as well. For us, why we've had it, so that's kind of like the technicalities of getting it, and since when we've had it. But the main reason for having a bank license for Bondora, it creates another like layer of stability and trust.
That's true.
For the consumers on both sides of our service. We've seen it through countless research that even retail consumers who are like looking for credit to purchase something larger or renovate their home, etc. Even for them, bank signals some kind of a trust element. And despite in the past 17 years where we've been building Bondora, there have been also periods where, let's say, you had Occupy Wall Street and multiple sort of anti-bank sentiment sort of periods. Then in general, broadly, banks are a pillar of trust, and they give consumers the signal that okay, this business is regulated. You know what you're gonna get, right? And we see that sentiment quite prevalent across Europe, and both among the retail investors as well as the retail consumers. And that layer of stability and trust is something that we see that now after 17 years of conducting the business, we can really build up on top of this foundation. Only really for the bank license.
So will it be the Bondora AS that get the bank license, or?
There is a separate bank entity that will get the license.
All right.
And it will take some time, for the full, let's say, group picture to get to the final format. But it's a separate new entity that gets a bank license.
All right. And which state of the licensing are you now? So what is like the time horizon to get the license?
Right now we're on track with our schedule, but it takes a bit of time still. Right?
Okay.
So it's we've been actually working on it. Also, I think close to 3 years now.
But are we talking about months or years in general?
It's I guess neither. Neither is the right sort of like answer, but you can represent years also in months. So we can't outline a very specific timeline because it is not fully dependent on us. So how the process works is that you basically you prepare everything, you prepare the org, you prepare the team, you prepare the technology, you file the paperwork. But then you have a lot of questions and answers, formats back and forth to cover every aspect of the business. And through this process, you still continue to make adjustments, right? You may have topics that the regulators want you to change. You may have capital topics that you need to change. So it's sort of like a bit of an iterative process until everything is then sort of checked off.
Okay, perfect. So staying at the bank license, but also moving to the product itself. At the moment, Bondora Go Grow offers like up to 6% annual return. A lot of investors are afraid that when you get the banking license, the returns are getting lower, the interest rates. Is this like true, or is it just in the heads of the investors?
So the bank and Go and Grow are separate and will be separate, basically, at least, for the foreseeable period. The reason is that with the bank license, on top of the the government mandated trust that you're getting, we also get a couple of additional benefits. One is that we can passport our credit product across Europe much simpler. Today we have, when entering a new country, we need to get a local license or a local, registration or some kind of a local authorization. And that takes, can take even up to 12 months or more per each country. And there's no reusability of that sort of application. So with the bank license, you can passport it across Europe, much simpler than what you could see in Revolut or N26 in other sort of activities. So it will give mostly at first a pretty strong operational improvement to what we can do on the credit side.
Mm-hmm.
Doesn't mean that we're going to immediately go to all the 28 countries, but it gives us a bit more freedom and simplicity to move around.
Mm-hmm.
So for example, in terms of like very large credit markets like Germany are currently, without the bank license, you can't enter them at all, right?
Okay.
So Germany, France, most of large European markets are actually currently not accessible to us.
Mm-hmm.
Theoretically, you can access them with a local license, but the local credit license has the same sort of like level of requirements as the bank license,
mm-hmm.
but it would not be passportable. So the bulk of the operational benefit comes on the credit side. Obviously, we can then also build new product areas that we don't have today. You can do secured lending. There's some caveats how you can do insurance, sort of like more streamlined, different, even theoretically like services related to crypto are available to banks, etc. So there's a broad suite of products that you can you don't directly get access to them, but it's like getting the licenses is considerably more straightforward than going one by one and getting yourself as a like license payment provider. So there's a lot of services that come. Now, when it comes to what maybe investors are referring to, sort of, what's another pillar that bank has access to is deposits. Classic bank equals that you can take deposits. That's the sort of like, if you take Estonia as a market or Finland as a market, then the key distinction between a bank and non-bank is the deposit component. In Germany, you have also the component that non-banks cannot actually provide credit at all, right? Why such rules? That's I think for every country to decide on their own. But in classic sort of terms, it is more about the deposit taking that is the sort of like restricted area. Now, when Bondora starts offering term deposits, then they are still going to be different products than the Go and Grow. Go and Grow will not get the same sort of deposit protection that deposits have, and the product dynamics are different. So with term deposits, you'll have like more classic setup of like be that 6, 12 type of products that you would currently maybe use Weltsparen or Raising or whatever to sort of to acquire.
Okay.
So the Bondora Bank product suite for investors is going to compete with the customers on Weltsparen effectively or Raising. Whilst Go and Grow remains as an option separately from that.
You will get lower interest rates maybe with the new product, but it's more secured even because you have the deposit securities and all the stuff.
So yeah, so I mean, if you look at term deposit rates today in Europe, then they're probably at like around 2.5. I think the highest ones, if you go to the large German banks, then you're gonna get that 0.1 maybe,
exactly.
Something like that. So that is a different market. And it's a different product.
Okay, all right, perfect. So when you look on the Bondora statistics side and on the blog, you find this IRR span, so the money you getting the returns. And I guess for 2025, you expect like 18% or something like this, and we get like 6% returns. So it increases every year what you made. That's good for the company, but a lot of people are wondering why have you lowered the interest rate from 6.75 to 6 then when you increase the return for the Bondora Group. So what was the decision to lower the interest rates?
So overall, the how the rate is structured, or what we're trying to sort of deliver, is that for the Go and Grow investors, we have 3 sort of key components of the value proposition. First, the stability of returns that we could offer them over, not that it fluctuates every day, but it gives you stability. Secondly, we want to be highly competitive with other traditional offerings. And third, we want to be able to deliver near instant liquidity. Right? This is the sort of like the 3 guiding pillars on top of which the value proposition of Go and Grow is built. In terms of, in order to provide a stable return that is also competitive, we're going to factor in, first of all, the returns of the loan, the necessary credit risk buffers, both for that loan, but also the macroeconomic environment. We're factoring in liquidity buffers. We're factoring in cost of running the business and the sustainability. So there's a number of components that go into actually providing sort of the unit economics level sort of protection or that we want to be able to provide. Like explicitly, we cannot guarantee the return. Like it's something we cannot say. We're not saying, but in order to be able to deliver on our promises long term, then there needs to be a strong buffers in between that we can provide this sort of like service sustainably. Yeah. And we've been able to do that now for close to Go and Grow has been live since 2008, I think. Yeah. So it's close to 8 years now.
Yeah. All right. So one question I was wondering a lot about is, so you have no restrictions at the moment how much money I can place on my Bondora Go and Grow. When I would like, I can place a 1 million euro tomorrow on the account. Yeah. So
there are different. I mean, what's not maybe sort of just to be clear. So for the different levels of account sizes, we need to do various levels of background checks. Yeah. Right. So that is different, but like in essence, there's no restrictions. Exactly. It may be just the bigger accounts will require us to do more and more stringent AML or anti-money laundering and KYC checks and source of funds and all of those things. But like from a service offering level, there's no differentiation. Yeah.
So, but how are you matching like the investors with the loans? Because when I don't know, maybe getting 10 million tomorrow, 100 million, I don't know where from, but when I place it on Bondora, how you can match that and promise me like the 6% then? Isn't that very difficult sometimes?
So first of all, if you get 1 million and 10 million tomorrow, of course, move it to Go and Grow. So don't, we've been running the business overall for 17 years. Right? Go and Grow itself as well for close to 8 years now. So we have on both sides of the marketplace, we can call it both sides of the supply and demand, we have quite predictive models to understand what's going to happen. Yeah. So with hundreds of thousands of loans, we know the cash flows has to come in, we know our loan demand, we know what are the repayment rates, we know all of those things, and we can dial them up and down as well, quite straightforward. The same applies to on the retail investor side, right? There's hundreds of thousands of customers, so there the same statistical expectations kick in as well. Yeah. And that's a big difference to maybe what we had in 2019, 2020. By now, both sides of the business have generated substantial amounts of data that we can use to predict the supply and demand, and then understand, okay, what needs to happen to dial up one or another to make sure that the marketplace sort of like balances out.
So do you also we have the Go and Grow investors, but you also have like institutional investors behind it, besides the Go and Grow investing? Or is it only like Go and Grow?
Inside Go and Grow, we have only retail investors.
I mean, besides Go and Grow.
So overall, like as we discussed bank, right? Then, eventually, you'll see that all of the originations that the Bondora Group can generate, there will be different sources of like customers, right? So you'll have Go and Grow, you'll have bank term deposits, and you'll have more structured sort of like investors. Okay. But they're not pooled on a same like, let's say, fraction or loan, right? And how they're separated is, so they're not like intertwined. We don't have company accounts anymore for many years on Go and Grow or the retail service, because we found that that's not like our core skill has been there on building a service for consumers and retail investors, because let's say retail investors with 1,000 euros or retail investors with 100,000 euros, the typical expectations are quite similar. We don't provide a private banking type of a service. But outside of that, then we see that we can build a very strong service across the spectrum of people, regardless of their income or wealth levels. Yeah. And for there, we keep the service sort of like as more and more. There was a very easy online app, effectively, that within one click you can sort of increase your sort of like savings, and with one click you can request liquidity from them.
Yeah, that would be my next question. So what people love about Bondora is like daily interest, of course, and liquidity. So in a normal case, you can just put money there, and daily you can cash it out. It's like €1 fee, but that's all. But in 2021, I guess it was, during the COVID time, there was a restriction because of the crisis. But all the other time it was working well. So what have you learned about this time? So why have you put the restriction in it, to protect the other investors also, or what was the thought behind it?
Overall, when we created Go and Grow in 2018, we created Go and Grow to be the way theoretically the best possible product on the market. Theoretically, meaning that every known fault of an investment product, including like deposits and other sort of like bonds, etc., would be somehow mitigated through the construct of, or like the terms of Go and Grow already upfront.
Yeah.
And one of the things we realized is that if you looked at, given I started Bondora with the team in 2007, which was at the start of the financial crisis, or the big sort of financial crisis, right? Northern Rock had been nationalized, I think, in the UK yet, but you didn't have the Lehman Brothers, and all of those things were not there yet.
Yeah.
So what you were able to see, and especially now as there's been like years gone by, is that portfolios that were highly profitable, were given away at fire sale prices because of need of liquidity, right? And because you have like this single balance sheet or lender in between, that caused bankruptcies, right? Although the assets were good. So you have so the basics is that you'll have the ability to go bankrupt, is more related to how much funding people have versus, the returns of the assets, right?
Yeah.
And we set out to build Go and Grow so it is effectively indestructible, right? So that there is no single balance sheet in between, that the investors directly own fractions of loans that are hundreds of thousands, right? And that was pre sort of like all the crypto stuff, right? So it is, you as an investor have a portfolio of hundreds of thousands of loan fractions, right? And it's you. It's not Bondora doesn't own it, and then you give us like money through a bond or something like that. And in terms of crisis, there is no construct that would force the sale of these assets, because if you'd have like a liquidity need and it's driven by mismanagement of liquidity, okay, you can go out and maybe sell the assets at a decent sort of price. It may take a bit of time, but you may be able to get a good price, or actually the fair value for it. But if it's a situation where everyone is selling, right, then you're basically for the investors who are exiting are forcing a loss on everyone else, right? Yeah. And that is why it was built, so that we rather cut back the liquidity feature to make sure that the returns are stable, right, and returns are protected. So the Go and Grow was by design set up in a way that returns are not hurt by the liquidity. We're doing everything humanly possible to make sure that investors always have access to the liquidity, right?
Makes
One
sense,
click, on and on. But when the situation really goes dire in the economy, there's a big financial crisis that we saw in COVID kicked in, etc., and there's a unexpected, like very, very high, unprecedented surge for liquidity, you don't self-destruct, right? That is core, and that has allowed us to stably build, now Go and Grow through a very turbulent 8 years. Yeah. Because, during our 17 years, we've seen the big financial recessions, we've seen, Brexit, Grexit, which didn't materialize, all kinds of things. And now in the last 5 years, we've seen Corona crisis, we've seen, multiple wars. Yeah. We've seen, the trade wars this year, which was a very big macroeconomic sort of like financial market change as well. So we can just, the risk management framework we built is now battle tested, and it works. And it was designed at the get-go to support all of that.
All right. So maybe talking a little bit about risk management and all the stuff and the biggest risk maybe. So what do you think is like the biggest risk for Bondora itself?
I think broadly we are, I don't even, there's not a single a single point of failure moment anymore. We've been investing into sort of risk management for considerable amount of time, especially as we are in the process of getting a bank license. Then, despite that process, we are already managing our risks, as if we are a regulated bank, and we've been using different best practices from across the industry to actually pick up, the ways how to run it. Our credit risks are very well managed. We have, as an investor, you're buying into a portfolio of very diversified portfolio across customer segments, across countries, and there's hundreds of thousands of loans there. Our credit models are data-driven, optimized, using data we've collected for 17 years. Every new country we launch, after the sort of meticulous process of picking the country, we have a sort of like a slow build-up in each country now. So it takes 18 to 24 months basically until we are confident that we actually scale up. During that time, we're continuously collecting the data to optimize the credit performance. Our sort of recovery processes in each country are going through courts, so we try to get the stamp of like approval, like the validation from the legal system as soon as possible. That means that your debts, even in cases where there is a default, are valid and you can collect them for the next 10 plus years, depending on the country. KYC and AML requirements are fully fulfilled. Responsible lending requirements are fully fulfilled. So overall, the risk management side, I think, is very well covered. We've built up this over many years. The multiple crises we've had so far to deal with have also sort of strengthened our ability to deal with macro topics. As mentioned, there's been unfortunately too many for a lifetime. So I think in general we're quite well trained.
So that is a question a lot of my followers asking me. So Estonia is next to Russia, and there's the war ongoing right now. So what is your thought about this? Is this like a geographically risk for Bondora, or do you don't think that could be a risk at all?
You need to also think about where the Berlin Wall was, right? So I would say that if you think about Bondora and being next to Russia, then there are two answers to that. The first answer is that obviously we do a prudent job in managing the risks across the portfolio, also geo-risk. So we have a portfolio of today where we originate loans from 5 countries, where the largest originations go to Finland. I think Netherlands is close to as big as already now is Estonia. So we have Estonia, we have Denmark, we have Latvia. And the risk of any Estonia as well as Latvia is very small compared to the total portfolio, right? So on a geographic level compared to 2014, where the war first started or actually started, then at that time, 2014, Bondora, 80 or 90% of the originations were in Estonia. We launched Finland already in 2013. Now, most of the originations are in Western Europe, right? So I think geographically, political risk is very well maintained as well. Then now, as an Estonian, I must say that we and I think former countries bordering Russia are investing heavily in deterrence and defense.
Yeah.
And I think the situations that people are seeing in Ukraine are not really realistic here.
Mm-hmm. So that was more about like credit risk. You don't really have like currency risk because like all the loans are euro, right, in the country. So
So if you think about credit risk and Russia, then actually it's one good point to mention is that when the war started and the sanctions started, we shared this information as well. People don't realize how low dependence the former countries that were part of Soviet Union actually have with Russia. So that the trade was like marginal, so that like Estonia basically blocked all trade with Russia and there was no impact on us on economy. So on credit risk side, that was actually one of the things that people initially really were worried, not that much about the political risk, but really of like, okay, what's the impact on economy, etc. But there is none. Like the countries have transformed their dependence more to US, to European Union, to rest of the world a long time ago. I think it's a very different situation. In terms of currency risk, there is all of the loans that we're originating are in Eurozone, right? Or pegged to Euro. So Danish krona is pegged to Euro. There's a fixed peg. True. They're not part of Eurozone yet. I don't know if there's a set date, but there's a fixed peg.
Okay, perfect. So last point from this side is like the platform risk. So because you have the construction of the Bondora AS, you have the Bondora Capital, the Go Grow company. If in a case something happened to the platform itself, so I don't know what should happen, but if there's a default, a big default, and Bondora Capital isn't there anymore, what happens to us investors? Because is it our investment in the loans, or is it belonging to the capital at this moment?
So overall, like it's quite unseeable what could happen with the Bondora Group entities themselves, because we have no debt. Our equity is almost entirely cash as well as this point of time, and there are no big liabilities. There are operating costs, of the company, obviously. But they're very well balanced, and a lot of the costs are variable, meaning that if you would even have like a sustained period of where we need to cut back on business volumes, our costs would drop as well. Yeah. So for example, in 2020, when we had Corona crisis, and as a result we stopped originating for a long period of time, we had the most profitable year on record because we didn't do investments into marketing and all of those things that actually drive most of our sort of like ongoing costs.
I can imagine.
So operationally, we are very well diversified, or very well managed on the financial risk side. But then if you take the assets that investors buy, these are assets they own. So even with Bondora, any of the Bondora entities, anything sort of happening to them, which is quite unforeseeable, then we would appoint a servicer to manage the loan book until until maturity. So all the cash flows would still go to investors.
So at this moment, it's not about getting back money, it's more about the time, because a servicer maybe needs more time to
it's a very standard service, right? So the servicer would continue servicing the loans, as the normal sort of setup is, because you'd have this is a quite standard practice on the market. It's not only what Go and Grow, or like something common to Go and Grow or Go and Grow platforms, but all the securitizations in Europe run the same setup, meaning that you have a portfolio of loans that, let's say, a bank issues, then they're sold to institutional investors, through the capital markets, and then those loan portfolios have these backup servicing structures the same way. Like, what if Deutsche Bank goes, bust? Then who's going to process the loan?
Exactly.
So it's a very standard, like, service or setup that we follow to make sure that we can, move to have every potential sort of even low risk event covered.
Okay. Coming back to like default loans, a compliment from my side for the new statistics side, because you see like all the information and you even can download like the Excel file now with all the loans. It's like very long Excel file, but you can do it. I did it once. But how much of general loans are problem loans, like in percentage? How much is default and you have to work for getting the money back? How much is working very well? So what is like the...
I mean, statistically the risk is built in, because we're not... you're not aiming for 0% default risk, because the default risk is not the risk on a portfolio level, right? The portfolio risk is cash flow predictability. Like as long as you're predicting the defaults and you're able to sort of manage them, it's not a problem as such. On the origination side, the guiding principle is actually the sort of responsible lending guidelines, because statistically you could lend to theoretically a lot of entities, and if you look at multiple other lenders in Europe, or especially the European lenders who operate outside of Europe, and some of these are being sort of are attracting retail investors as well, then they are lending to basically anyone as long as statistically you can make a profit. We follow very strictly the responsible lending guidelines. To me, we make sure that the customer have the income and financial situation to actually repay the loans, right? Not simply that, statistically, like, we'll make a profit. So that's not the guiding setup. So the responsible lending framework is really the foundation. Now, however, regardless of that, things happen. And the key things that happen, to people overall are A, you have job loss, right? And job loss may be, let's say, self-inflicted, but typically we see it's more about the companies. So because a lot of people are employed by small, medium-sized companies, something happens to the businesses, they don't get their salaries, etc. So that's one pillar. Then second pillar is health, related sort of like appearance. And then third is divorce. And family situations actually have a very strong impact on personal finance. So if you do personal finance blogs, then you should have a separate section on divorce. But it is unfortunately true, and that has an impact. So these are the three things that typically, create financial stress in a family. And in those situations, we have solutions for the consumers to try to cope with this situation. But if nothing happens, if it eventually leads to a default, then we have legal processes. How do we collect then this overloan over the period of whatever is set out in the country? The level of these things happening is slightly different per country. It is also a factor of what are the maximum interest rates in the country. So like how strict we need to be also. So in Netherlands it's only like 2 or 3%. In some countries like 5-6% of the portfolio, of the originations in the first 12 months that lead there. So
okay, all right.
And it has changed quite significantly over a period, over the past sort of like close to 20 years we've been operating. When we started out in 2009, it was during the crisis, it was actually like 1 in 5, and we learned a lot and all of the data. So now it's close to like 20 times lower, I think, than it was back then.
So you have like very high interest rates for the consumers that want the loans, like sometimes 18% or higher. Why is it that high? Is it like short-term loans especially, or what is like a typical loan you're originating? Like maybe you have an example?
So first of all, I don't think we have high interest rates. The interest rates in Europe are generally all capped by regulatory limitations. And if many of your viewers also look at the credit card rates that are offered by their
21%.
on their own banks to them even, then they are basically in the same range. So I think broadly Europe, the credit card, consumer credit card, it's basically the same category. is, in the range of 12 to 18%. You have in some cases a bit lower, some cases a bit higher, but that's sort of the range. In US, it's typically a bit higher, right? But it's broadly like a quite standard range. It hasn't changed in the 17 years we've been in business. So the rates in Europe are generally quite the same. Of course, different segments get different rates. So in our case as well, that each customer who comes in, each consumer is risk assessed. So what we do is we go through the information in the credit bureaus. So in German example would be Schufa, and etc. So we do the credit bureau checks. We do checks from any other databases we have access to, like population registry is quite typically accessible. We look at the information they provided themselves, and we then also, in most cases, also use open banking data. So like BSD2 or this open banking data, where we, from the bank statement, we scrape all the incomes, all the payouts. We use all of this information to calculate, credit worthiness part, which is affordability part, which is about income, liabilities, expected cost for dependents, expected cost for living costs. And then we also run credit scores on top of it. And as a result, we basically have a set of customers we can lend to, and everyone gets a unique price, understanding. And through there, and they also get different balance, opportunities. So some customers sort of balance maybe up to 18,000 euros. For some customers, it's 3,000 euros. And obviously the rates are different as well, right?
Are you focus more on smaller loans and not like somebody?
It really depends on the country.
Okay.
So I think more and more the balances are higher and the rates lower. But there's a balance, because then you'll do a bigger loan, but then you'll have maybe few customers with smaller balances. So it's a mix of things.
All right, so coming to the next questions, it's about expansion of Bondora. So you only have 5 countries right now, right? So are you planning to get new countries soon, and which countries you planning to get?
Sure. Only 5 is a bit of an understatement because most of banks operate in 1, maybe 2 countries,
that's true.
Right? So check how many countries do German banks have.
Yeah.
So, but today we have 5. So we started out in Estonia first. That's basically the home country. It's not the largest country anymore for a long time. Second country is Finland, where we've been operating already since 2013. It is the largest country and will remain to be so in 2026 as well. Then we have Netherlands, which has matured quite well and is already today larger than Estonia, and likely will be Finnish size, in quite some time. So they're quite equivalent in the credit market. Sizes are quite equivalent. So now the question is how quickly we can build up the market share in Netherlands, but we see a big opportunity there. Then we have Latvia, which is overall going to likely be a smaller market than Estonia. Overall, the credit market is slightly smaller. And then we have Denmark, which is also developing really well, and is likely going to be also similar size to Finland and Netherlands. So from these existing 5 countries, I would expect that, obviously depending on the local competition, etc., Netherlands, Finland, and Denmark should be quite equivalent in volumes, but the markets are substantial, right? They are all in billions of balances, right? So in each of them, you could build a €1 billion portfolio.
Okay.
Besides those 5 that we're already operating, we have launching Lithuania, where we got the licenses this year. We set up we did our first transactions this year, and now in the coming 6 months, we're gonna start fully originating. and then we're likely relaunching in Spain as well.
Spain, all right.
For each of the countries, after choosing the country, then it takes 18 to 24 months really to collect the data and process it, because we'll initially we don't have our own credit model, right? We basically use data from the market, we use market vendors models, and we use credit models that are reusable across countries. So we see that across all the countries there are some things that work everywhere, right? And then there are things that are like very local specifics. The local specifics come from the credit data. If you take US, a big benefit of US as a single market compared to Europe is their FICO, right? So you have single credit model, like single credit bureau for everyone, regardless are you from Tennessee or New York. In Europe, you don't have it, right? So you have to build custom models. The data is similar, but you need to build custom models everywhere, and that modeling part is what takes time. So these are the two countries that we're going to go live with 2026. And looking ahead, after we have the bank license and after some time has passed of getting everything operating under the bank, then we're likely going to restart expanding, but not before 2028.
All right. So Germany is one of the markets you want to go.
Okay. Germany is a very big market.
Yeah, exactly.
Germany is a very big market. In general, what we see is that so how do we choose the countries? So today the choice has had to be limited to countries where you don't need to have a bank license to originate loans. So that has set quite strong limitations on where we can actually go to. Outside of that, we look at what's the competitiveness of our product among the market, because we're trying to offer, fully online, automated sort of underwriting and great customer experience at competitive rates. But that also assumes that the customers are open to that and are able to provide all of the information online. Because if everything is very manual, or people expect some kind of a physical touch, then it's not something that we would prioritize first. So the size of the market is key. Then our competitive position and the consumer expectations are there. Plus, of course, we look at what competitors are up to. And in many markets, including Germany, I think the competitors in the credit space are quite weak. So the opportunity in Europe is substantial, right? So even if from the neobanks you can see that like the customer experience difference between some modern companies versus classic ones, especially in Western Europe, is quite drastic. The big banks have had some time to pick up, but they're pretty poor in many areas in the consumer space. So we think that the opportunity will not go away in a long time. Obviously, in every country there are very strong sort of like local, let's say, tech heroes in the banking space. Even traditional banks. I mean, if you look at many Polish banks, then they are really good. Like the services are really good. But in many more Western countries, there's quite a lot of room. Right?
Yep, that's true. So staying at expansion, but by the product itself. So that's also questions I got very often. So people would like to have like similar to the Go and Grow now, but to lock in and maybe get higher interest rates. So see like daily interest, but you can't get the money out for maybe 3 months. Like is something like this maybe planned? So because it's more plannable for you also when you log in this or not.
So in 2026, we'll continue focusing on improving and like making sure that the existing value prop is our value or the customer experience is strong, so that the steady returns, high returns and liquidity. But overall, this packaged into a seamless sort of like experience. And the experience side is what we're really trying to like now fine tune to make it once again market leading. We probably underinvested compared to our own ambition in some areas. So we have, different generations of products that we're now sort of like streamlining all into a good, very good app. As part of that, we want to really like set the foundation that it's very hard to compete with us. And then what ways we're going to drive the product further from now is quite open, but I don't think honestly that particular product that you mentioned actually will get attention. We don't see that in our data that much. It is obviously something that people will always say that give me higher returns and everything. But what we're more seeing is that a lot of the customers have kind of grown up with us. They're basically now have kids and they want to have like kid accounts. So there's we're rather looking at ways how to make this product and experience accessible for more people, rather than really changing the product itself. I think that's going to be a more key driver of making kind of Go and Grow kind of omnipresent or available and accessible to everyone and anyone. That would be a bigger driver, because there's literally no one who should not have Go and Grow as one of their main sort of like savings or investment products.
All right. Can you remove the €1 withdrawal fee?
Obviously, we can adjust that if this is sort of if this is going to be the key sort of like limitation, then that may be restructured.
So talking about like the investors itself, what is like the average investor on the platform? How much does he invest? How long is he with Bondora? Do you have you have data on this, but what is the average investor?
Honestly, like the average investor is someone like you, is maybe not an influencer, but we have a good broad mix of people, both men, women.
Is it more men than women?
It is more men. Yeah,
okay.
It is more men.
It's way much more men, or?
It depends on different sort of time frames, right? The more like the older we go with cohorts, it was more men dominated, because the product was more, initially like Bondora overall was more complex. I think Go and Grow has a much like wider appeal.
Okay.
And there is traditionally also like different sort of like maybe risk spectrums initially, because when the product was new, then we see that men overall are more risk taking. They're open to test new investment products. Whilst our female customers have been more sort of like making steady, to collect something for the kids, etc. With Go and Grow now being on market for such a long time, then we don't see those differences there.
Okay.
In general, like what we see is that regardless of the wealth and income levels of the customers, then the customers put at least 10% of their sort of like portfolio to Go and Grow. Wow. That's like a target.
Like on overall portfolio with stocks?
Excluding real estate, right? Excluding real estate. So I think, in generally, like, no, and that is a key, foundational difference between the countries, is that like sometimes real estate can be a substantial part, and that's more like very typical. Like in Estonia, a lot of people invest in real estate, rather than stocks. So it depends. So targeting up to 10%, it's not like a small sort of like side business, but it's not also like 80% of the portfolio, at least, not now. Once again, we believe that Go and Grow is really such a great product and is already diversified, that like you don't need to diversify on top of Go and Grow separately, right? You don't have to have, multiple similar steady like high liquidity products in your portfolio, because Go and Grow itself is already a very diversified product. So that's common. What else is common is that the like age spectrum is quite wide, but it's also like a lot of people we acquired in 8 years ago, 10 years ago, they continue as customers. It's quite sticky. we see that the average inflows from customers don't actually diminish over time. So on average, you have obviously inflows and outflows depending on what people do with the money. But from the cohorts that we acquired in, like, let's say 2020, the annual inflows continue to be steady.
Wow.
And all the research we do always comes back to the part is that the people see Go and Grow as one key part of their long-term savings, right? Yes, they use this also for like when they need to make a bigger purchase, but then often they replenish it later on, right? And then many people have do their sort of like kids kind of college funds with Go and Grow, and then many other sort of like similar things. So, but they are average people, mostly still salary income. So it's not that they've made inheritance from somewhere or somewhere. So like it is really the average people on the market who are looking for a good alternative to traditional investments, something that gives them a steady return, so they don't have to check every day like how it's gone up or down. So something that gives them stability, steady return, high liquidity, and a good user experience. People target around 10%. Obviously it ranges, but it's that they look at Go and Grow as a part of the diversified portfolio. And we're doing a lot of things to kind of create this trust and stability, so people would consider investing a larger share of their sort of like investment portfolio with us. And that's the continuous sort of like work we do internally to create that trust that people see that like we can dedicate maybe 20-30% to Go and Grow.
What are the most frequently asked questions or frequently asked products the community is asking for? So maybe my community asking, it would be nice to have like a kids account for Bondora, because in Germany then you have a lot of tax benefits when it's on the name of your kid, but that's not possible at the moment. Are you getting a lot of requests like this, or?
So what we've seen, as said before, it is quite a lot of things that are related to giving more access to Go and Grow to wider pool of customers. Kids accounts or family accounts are truly one of those areas that we're looking into. People are also looking at already buying potential other services through Bondora, be that insurance or other sort of elements, and also to continue sort of making the product really easily accessible, like on the app, and make it very streamlined. One thing that has been quite recurring is the ability to create your different goals, so that you can create clearly separate inside Go and Grow.
Like a fund for holiday, a fund for a car.
So that people would be able to kind of like keep different targets. So this is something that's heavily requested. So we see big part of the work we're gonna go to is covering the use cases and demands or expectations from the customer base. And they are really related to kind of making it product usable for the cases they actually. Customers are already today using it, but they're kind of like maybe doing it in like separate additional calculation in Excel, or just keeping track that this is their kids college fund. So we want to make all of those things sort of easily accessible in the product.
Okay, perfect. So there's always one critical questions from the community. So of all questions I get, this is like the most common critical question. It's about frozen accounts, actually. So I know personally doesn't know anybody has a frozen account, and always the people comment, I read it online, somebody has a frozen account, but they don't know anybody personally. But there on Trustpilot are some comments that the accounts got frozen not because of anti-money laundering or something like this, just because, and sticking like this for months. Is there
in general, like all of those cases, if people have a problem like that, should support
exactly
deals with them fast, and if they are issues like that, then they should sort of immediately contact support. The frozen accounts are only related to anti-money laundering and KYC sort of rules. There are different thresholds like that sometimes trigger alerts. There's also different names or transactions that sometimes trigger alerts. Unfortunately, some names are more prone to alerts because of we need to process each transaction that comes in and all of the customs against sanctions lists, against different anti-terrorist lists. So we need to do all of that screening. Those databases sometimes have full details like the name and date of birth and yada yada yada. Sometimes they just have a name. And if it's a more common name in some groups of society, then they trigger more, right?
Okay.
Sometimes it's simply that the transaction size is triggering. Then there's lists of countries that sometimes are put into these watch lists, and they include European Union countries.
Okay.
So, for example, like US may determine that all bank accounts in country X or all banks in country X in Europe are like higher risk. That means that internally you need to process all of those sort of like things. So there's a set of anti-money laundering rules, the KYC rules, which is kind of a word of its own. Only those rules can trigger the flags. We're doing everything internally possible to avoid false positives or triggering them. But by law, we can't exclude them in many cases. Sometimes the rules are very silly that you need to process every payment from a certain bank because the shareholder of the bank is kind of on a watch list somewhere, right? So these things are annoying to us as well. We're doing a lot to try to improve the user experience around it, to give the information fast. Generally, support we have is fast, so it should happen quite rapidly. And if people have those cases, then expedite fast. But we have a legal duty on our end because we have both the banks we partner with expect it from us, and then we have the anti-money laundering agents in Estonia that also expect that we go through them, we ask the documentation, we ask the source of funds, and etc.
All right, so that's like they have to get the documents for proof of residency, maybe proof of funds.
Depends on the particular case. Is it just residence? Is it proof of funds? It's not the document set isn't any different than what you would get in Revolut or in your own bank. But it's something that we need to do.
When your name is blacklisted because somebody else has the same name, you have to prove you're not this person, or how is this working?
It's quite yes, basically. Okay. But in some cases, then you go and you double check where they are and the countries and the passports, etc. But it is basically there are let's say some types of names that have higher propensity in the watch lists. Okay.
So I'm glad I'm the only one with my name in the world.
You'll see. So but if you're flagged, but in general, there's certain sort of names that are more often there.
All right.
It's hard.
Coming to one last question, and then outview for the future maybe. But I have forgot this point at the regulation part. So the Bondora AS is regulated, but the Bondora Capital isn't regulated. Isn't there a possibility to regulate the platform itself also, or is it because you're only funding money for the Bondora AS that you can't regulate the platform itself?
So it depends. So the assets, then the servicing of the assets is by definition already regulated through where they came from. Right? The platform currently does not have a license. It doesn't mean it's not regulated. It doesn't have a license. Right? There is so far no such specific license to cover it. Regulations still apply.
Yeah.
Right. So all the financial services, advertising regulations, anti-money laundering, regulations still apply. So we are still regulated, but through the legislation. We don't have a license. We don't have a regulator as such that has issued authorization. So it's not that it's some kind of free man's land. So everything, there's a lot of rules that we need to still follow. And as close association or because of Bondora, there's a lot more internal controls that are set on the platform. We may eventually get a separate license for Go and Grow as well, or the platform. Right now, there's just no very direct, goodly applicable one. We've been constantly looking at, because the way you could look at Go and Grow being closely associated with maybe the blockchain logic or crypto logic, you could maybe, but there's no like perfect fit right now. Few years ago, it was the crowdfunding regulation that came in Europe, but the crowdfunding regulation specifically
you have to collect for other companies, right?
No, it excludes consumer finance from these particular assets, because consumer finance is regulated already, right? Because it's sort of like the asset or asset origination and servicing is by already overseen. Then they didn't create like a separate set of regulation in between.
Okay, perfect. So coming to the last questions, like an outlook for the future, where do you see Bondora in maybe 10 years? What is your vision for the company?
So we expect to be one of the leading neobanks in Europe, that is really trusted by consumers for both fair credit as well as simple, reliable investment services. So
you're also planning to do like standard bank accounts and stuff like this in the future?
Standard bank accounts not. Okay. So it's really about, our focus is on credit and then, retail investment products.
So
the core transactional banking, we don't see that we can be competitive there.
Yeah.
It doesn't mean that it may not happen, because technology changes, our skills change, the customer expectations change. Because we want to drive our company forward based on the actual unmet needs or high needs of our customer base. We haven't heard a single customer of saying that, hey, we want to transfer money between two companies. It's not. I think there's a lot of like players in the space right now already. Can we be much better at those services? Probably not. But when it comes to sort of like credit and like retail investing, there's a huge opportunity still there. Especially for most of the people in the society, because Go and Grow gives you stable, steady, like returns, instant access, and seamless experience. If you take almost every other product, other than deposits or term deposits, they have too many complexities that are just too confusing for a consumer, right? Most people don't understand why one day the stock goes up, stock goes down, bonds go up. There's all these influences we try to explain, but no one really can make it clear to your grandmother, right? So we want to have really Go and Grow as a product that anyone like in the society, in the sort of community can use, can understand, and can work with it.
Okay, perfect. Thank you so much.
Thank you
for your time, for having me here.
Pleasure having you here.
Thank you.